Let's see if you've got it in your notebooks. If not, I'd be very disappointed. Ryan, I hope you caught up over Christmas after your couple of weeks off. Should be fresher in your minds than the others because it was a few weeks ago. Fine. So we looked at RSI last time. I'm just giving away what I was going to do tonight. How have we found it? I did take a trade off there last week off the RSI on the daily. Have you been using it? We'll cover it again briefly. So tonight we are going to look at our famous Bollinger Bands and how we can effectively use Bollinger Bands within our trading. Does anyone currently use these at the moment or aware of these? Yes or no? How you finding them? So, do you know also someone in our blue group does use these? Just for small trades, and we'll go through them. So, Bollinger Bands, the history of it. Strategy was developed by a man called John Bollinger in the 1980s. Bollinger Bands are basically used as a chart indicator. So it does help you understand real-time market volatility. So there is a standard setting when you go to set them up in your charts, which is 20 to 2. That's the optimal setting. Just leave them as that. Basically, what it means is, in a nutshell, if the Bollinger Bands are close together, then the market's quiet, it's consolidating, it's not really moving that much. If the bands are further away from each other and they start opening up, that's when the market's starting to move, starting to trend. This is only an indicator, so Chill Forex, we don't base our trade just on Bollinger Bands. Something that I'm aware of when I do look at trades, but it is good for us to be aware of these levels that they're at, especially on the larger time frames. So traders closely watch market volatility because they can potentially turn into reversals. Bands do help you with them. This is similar to moving averages, but it has an upper band and a lower band. And this is what we call the price channel. So I will show you these in a moment. The upper band and the lower band acts as support and resistance. So the lower band obviously acts as support and the upper band acts as your resistance. So traders do include the 20 moving average along the middle of it. So for example, let me just draw it out quickly in a nutshell. And you have your line running through there. So your upper band, that's your upper band. That is your lower band. Oh God, not you. That's your resistance at the top, and then that's your support at the bottom. Then your favorite subject. And then we've obviously got our moving average line that goes through the middle. So this area here is called your buy channel. And this area here is called your sell channel. It's fine. You've probably heard me talk about these quite a lot, so you can do it again if you want. So your buy channel at the top and your sell channel at the bottom. So when the price breaks the bands, it's known as breaking the bands, which is the biggest sign that a reversal could be imminent, or we're going to get a pullback. Unless there's strong fundamentals, that will continue to push it one way through the bands. But you will often see the prices bounce off the top and the bottom, and this is called a Bollinger bounce. So I tend to look out for bounces off the top and the bottom when the bands are tighter together. So when the markets are less volatile. So let's look at it. here on a chart. So we can see it on the daily time frame. It's a lot more rare that you get breakouts of Bollinger Bands on daily time frames. So you can get good, what we call bounces off the top of them. So just saying, if we start over here, as we can see, this leg here, is it in a buy channel or is it in a sell channel? What do you think from what we've just been over? So remember the buy channels at the top, from the top bit of the band to the middle. So this is in its buy channel. The sell channel is just down here. So this shows a good buy stretch, should we say. So as we can see, every time that it does break and close outside of the band, it does retreat back into the band. This is on the daily time frame, so just be aware of what time frames you're using. Next one, you get a big breakout of the band, and what happens? You get a good reversal, comes back down to this level. So, like I said, if these are on smaller time frames, you can get them break out and kind of stay out a bit longer. So these top of the bands, as you can see, they're acting as good resistance points all the way up. So it's doing its job, should we say. Next thing is we get down to the bottom, and we are now in the sell channel. And as we can see, we get to the bottom of the band on the sell channel. So the bands are quite wide apart, so it does indicate that a move's been made. But now we're at the bottom of the band, and you see a rejection candle, a strong rejection candle off of it. It's a good indication for a buy, because we're seeing that bounce, that Bollinger bounce. We've got one of our reversal candles here, showing a good bounce at the bottom of the band, and it makes a good buy opportunity upwards. Then you get to the top, right at the top of the band, break out here, pulls in a little bit, but it does go further up. The bands are very wide open. I wouldn't necessarily buy a pullback because the bands are so wide apart. Probably wait for it to hit the top again, and then it'll give you a good sell. Also, why I wouldn't short it after a breakout here is because you've not got a strong rejection candle. It's about looking at your price action as well. Here, you've got a big, strong rejection candle from the top of it. It'd be a good entry. So as we can see, the bands are wide apart. It shows the market's trending. Let's go to a time where it might be a little bit quieter. So just around here, we start to see it closing a little bit. And this is where it indicates a bit of sideways movement. And this is where you can maybe buy from the bottom and then just sell from the top and hold it for a bit shorter. Because the bands are coming into closer together, it's showing there's not much market volatility. And this is where we can maybe just get in and out. And this is what I prefer on what one? So you've got your support and your resistance from the top to the bottom. The bands are helping you out with that. And all you're doing is simply just in there. So there are two ways you can trade it. I just share with you how I tend to trade it, and that's when it's a bit quiet. I don't always necessarily do it as well. So you can use it as an indicator for points of support and resistance. You can get better prices waiting for it to bounce, hence why it's called a Bollinger Band. Bigger time frames will mean bigger moves, but do ensure that you don't just go, right, I'm going to take an entry on a Bollinger Band. You want to look at all the other parts of your trade criteria requirements, because I wouldn't necessarily solely trade off it. An indicator is always a measure of past performance. Bollinger Bands does not give you any indication of future price movement. So once you get yourself a bounce and you see that within your price action, get yourself a good price. So we're going to look at a couple more now on the charts. So as you can see, we've got our three areas in place. At the bottom, we can see that it's pretty much same within its sell channel. So we can see a good bearish trend. It's making lower highs, lower lows, lower highs, lower lows. And maybe if you use this intraday trading and you see it continuing, and you can probably just enter on this a retest of this moving average that goes through. After you see a bit of rejection outside of the band here, probably look at exiting the trade. Down here, you can see the next candle hasn't beaten the low, or quite near to the low. So when it's in its sell channel, it makes it more likely to go short, but you don't want to be selling from these sort of levels down here. You're going to wait for the pullback, form a lower high, and then that's what you want to give yourself an entry. Because the market moves in zigzags. I enter at the lowest price possible. Then when you see it here, again, the bands are closing up. And when it closes up, it means volatility is going down. As we can see here, it does break below, and we get some reversal candles, and we get a big strong impulse candle here. So after this impulse candle, what starts to happen to the bands? So I'll leave that over to you. So you see this big candle at the bottom, what starts to happen? Correct. So they widen. So myself personally, when I start to see them widen, I'll probably exit if I'm still in a trade here. I don't want to get involved in it really, because this is starting to show you that the bands are widening, so it's starting to move. Because it's widened and it's gone into the buy channel, it does make it more likely that it's going to continue north. The bands are opening, it's gone into the buy channel, there it's had still a retest, so that's your resistance, it's still come back and retested support, but now this support has moved from down here up to here. So you've got a higher level of support now. As we can see, it moves up and it stays within the buy channel pretty much all the way up. So you can see the two different ways you can trade it, either in here when it's nice and quiet, a bit more predictable, or once it starts entering buy channels and bands are quite wide. As you can see. Any questions at all on what we've seen? So how do we set these up? Now we're going to look at it on our MT4 platforms. Then I'll show you on TradingView. So on our MT4 platforms, you just go to Insert, click Indicators, slide across, scroll down to Trends, and then you just hit Bollinger Bands. Then you'll get this box appear, and that's how it be pre-filled. You can change it to any color you want. So you can click that, have a play with whatever color you want, and then the thickness of the lines. So some people tend to have them really thin, some people tend to have them thick like that. So you choose your own width, and ta-da, that's what your chart will look like afterwards. This is actually quite a good example for the Bollinger Bands being tight. So as we can see, where they've been quite wide apart from each other, it's starting to tighten up, and you get your support and your resistance. And you start buying from the bottom, selling from the top, and you just play it up and down until you start getting bigger candles like these, and you see bands start going down there, these bands start going up there, and then you might want to exit if you trade it the way I trade it. Thing is, with these support and resistance, they're a bit different. Whereas what we might draw up certain prices act as support and resistance. So say, for example, we might just have a line, say, going through there as our resistance. Whereas the thing with Bollinger Bands, these are moving resistance levels. So if you look there, that's the support of that price. But now if you look, the support's down there. Now the support's up here. It follows current price movement, provided support levels, which can be helpful for us. So looking at it on TradingView, if you just do indicators, click that button, type in Bollinger Bands, and then it will come up like that. Does look a lot better in TradingView. Does everyone in here use TradingView? Or you still use an MT4? Looks like it's got a lot more class as well going through TradingView. The TradingView is free to set up, guys. Don't have to have the paid version. There is a TradingView app as well that you can get on your phone. It's something Luke likes, putting screenshots in the groups. Yeah, he does pay for it as well. Yeah, some people do prefer MT4. Yeah, it's called TradingView app. That's correct, that does happen. So when you draw something on your TradingView, on your computer, so when you're logged into it, and then you go through it on your phone, the drawing's there. You don't have to redraw it. It copies through. It can be quite helpful with analysis. So what I tend to do in regards to it is scalp it when it's quiet on the smaller time frames. So as you can see here, I wait for these to start happening. Start to see a bit of a slowdown. Again, start seeing a bit of a slowdown. And this is how I just necessarily prefer to trade it. When it's slow, we've not got big candles. The big candles are starting to settle down. And this is on a 15-minute time frame. So it can still be effective. So if you're doing it on 15-minute time frames, then you've got to be around to observe price action. Because you don't want it making the move up here in half an hour and then missing the rejection. And then by the time you look at it again, it's back down here. Scalping means observing price action. So just a quick one actually, just so you guys know that the website should be up and running by the end of the week, and it will have all previous webinars on there ready for you for each group. So that'll be there. There's some good tools on the website in regards to keeping you up to date with financial information on Forex, cryptos, and world news. So it's educational as well. And we do also have our exclusive members area for you guys, not for public eyes. We'll talk about that. Potentially not been taken off the cards. Much as I wanted to. Right. So we're going to look at channel switches. So Bollinger breaks. Intraday chart. Sorry. So a channel switch is when a pair goes from a sell channel into a buy channel. So this can start to maybe give you a bit of thoughts as to a trend change. So if we look here, we can see it bouncing off the bottom. We then see it observe into the top. The bands are close together. So what we tend to do is wait for a strong bounce from the bottom. So as I will tend to be, probably from there up to there, I'd probably be in the trade, and from there down to here. But intraday trading, you can wait for a strong reversal signal off the bottom. And once you get that strong reversal signal off the bottom, so here we have, what formation do we have? It's 3-star formation. Testing you guys now. Did say it would be interactive. So at the bottom of a Bollinger Band, we've got one of our reversal strategies. A few of you guys have been with me for a while, so you should definitely know this. Bam, straight in. The first one in there, Daniel, hold on. Fantastic. Okay, so yeah, it's a morning star formation. We've got a morning star formation at the bottom of the bands. We've had a break and a close below them, so it does indicate this. But when you start to look at building up more evidence for a trade, you've got your low here, your previous low is down here. So we're not even getting down below these lows now. So this all starts to add up evidence. So evidence, I don't know why I said it like that. Evidence in regards to taking the trade. Broken out of the bands. We've had a morning star formation. Got a strong candle here. After this strong candle, the bands are starting to open. So it does indicate that we could be looking at a long move. All because we've had this channel switch, it's retested, formed a higher low, and then we've had a good move upwards. Because you've had a good move upwards, it's broken the bands on the lower time frames, so it comes back inside the bands. Remember, on the higher time frames, we might see some more reversal, stronger reversal candles, but on the lower time frames, we just tend to more come back inside the bands. It consolidates a bit before carrying upwards. But what it does say, it stays in the buy channel. Doesn't even come back down and test the moving average. So it's quite a powerful move. and it's expected to continue. So that's why I always say mix these with other things. We've got a price action reversal strategy right there. We can see that it forms a higher low. So these are just adding weight to the trade. So instead of saying, right, I can see it bounce off the bottom of a Bollinger Band, you've then added two more aspects in there as to why you've taken the trade. And generally, this is US Swiss, because fundamentally, the USA is a stronger currency than the Swiss, which it is. So that even backs up your pointers in taking the trade. So you've given yourself, instead of just looking at one area, you've given yourself three technical areas and a fundamental area as to why you've taken a trade. Obviously, those dollars delicate, and it can fall in the back of anything Trump says, but overall, as a whole, that economy is stronger. So remember, we say we don't just take the trades on these Bollinger bounces or these Bollinger Bands, we tend to add more evidence. And that's what trading is all about. You need to justify to yourself why you take the trades in a good way. And really test yourself, especially when you're writing your journal or when you're writing your trading plan. You really need to be strict with it. So if someone asks me why I took a trade, I can probably reel off about 3, 4, 5, 6 sentences as to why I've taken it, and that's summarising it. Well, I've got a lot of people saying, I'm going to take this trade. Why are you taking it? Because it looks good. So to me, saying it looks good doesn't necessarily deem it to be full analysis. And because YOLO said, does definitely not mean that. So, looking at it on the daily, so someone's just said that's what I used to be like. I used to say that, I used to be like, why have you taken this trade? And you said, just because I fancy it. And was he profitable when he was taking trades for your fancy? You be honest and say yes or no. So yeah, it's a lot harder to take a trade just based on one thing. So yeah, so they'd put no, they weren't profitable when they just took trades that they thought that they fancy, rather than justifying why they're taking the trade. So again, we're just going to look at how effective they are on bigger time frames and how much of a move that you can see. So you can see these good resistance levels cause markets to pull back. Good support levels. The bands are close together on the daily. And then we get back down to a lot more of a consolidation area within it after it stopped trending. And you could literally just buy the lows, sell the highs. If you wanted to get out there, you could still make a good amount of bits. So, question to you guys. If you're looking at this Bollinger Band and you're here, you can currently see the price here. What do? You're going to buy, you're going to sell. You've seen this good bit of movement down off of it, sitting there around this moving average. Exactly. All you got is so far. So yeah, you do nothing. You just wait. And if it doesn't come back down to the bottom, it doesn't come back down to the top, then again, you just leave it. Look how long it's sat in consolidation for. This is the daily time frame. This is about 7, 8 candles. So it's 8 days if you're sitting there, not really doing much. So all you do, wait for it to get to the bottom. And if you're going to buy, I think I'll be much more comfortable buying here than I would do here. It gives you a lot more room to go up. That only gives you that far. But if you look here, you've got more of a journey to go. And on the daily, you can see a low. If you wait for it to bounce up, and then it forms a new low, you can see slightly that it's higher than your previous one. Again, this is indicating that we were looking for a move upwards. And when we're touching the bottom and going outside of it, we're actually not now. So yeah, with these rules, you don't buy in the middle. There's no point. But why you don't sell here is because the bands are wide. Whereas here, the bands are closer together, and that's where you can sell. Once you get a breakout, then just don't sell, because the band's widening. It's more than likely that it's going to continue upwards, which it does. It's all about adding evidence to the trade, adding weight to the trade before you take it. If you'd have got in up here, you'd have been in a very good position. You've got a big snapback there. And that was US presidential day. So we could see a lot of moves within the market. So does everyone feel that they've got a bit of a better understanding around Bollinger Bands and how to use them? Just how to understand them? So you look at Bollinger Bounce reversals. I'm just going to highlight a few in there. Sorry, a few in here. Strong bearish move down. 3 candle formation. So we'd be expecting a move upwards. Bounce off our resistance at the top before coming back down. Bounced off here before coming back down slightly, but we'd have to be aware of these only being short-term trades, because you've got to look, we're in the buy channel and it's trending. And then you get it stopping up here. You get some rejection, failing to beat the highs. So you're expecting a small pullback. Big break and close outside of the bands. Got a nice bullish piercing here, but again, we're in the sell channel, so you've got to make it short-term trades. I wouldn't even get in here after that move. Again, you've got another break and a close outside. Again, I'd probably only have that as a short term. Cheers, mate. So just summarising this up, these can be used in all time frames, but what you've got to understand is you've got to match it to your preferred trading strategy. So if you prefer scalping, you want to be using these on the 15-minute, the 30-minute time frames. If you want to be holding these for a few days, a couple of days to maximise what pips you can get out of them, you want to be looking at the daily time frame. But sometimes from the bottom of the band to the top of the band on a daily time frame, it can take weeks to get there. So this is where you've got to display massive amount of patience. So you await evidence on the candlesticks in regards to a bounce off of it. So the moving average going through the middle is the 20 moving average, so it also acts as good support and resistance. So just going back to it briefly. So this here, this line, the 20 moving average, can also act as good support and resistance. So it's acting as support there. Now down here is acting as resistance. but the 20 moving average does get broken. It's more one arm I'll look at for a break of trend would be the 50. But we've gone through that a few weeks ago, moving averages. So just remember, the bands are both together. You've got your upper and lower band that's more suited to short-term trading. The markets are consolidating. Once the bands open up, the markets are starting to trend again. And just purely remember these Bollinger Bands measure market volatility at the time. It does not provide future insight to any price movements. So does anyone feel that they're going to go away and try and use this over the next course of the week, or just maybe have a look at it? You can send me questions on it, whatever you want. Anyone want to give this a go? Yeah, so we look at longer term trades in it, which is good. Just all depends, especially when you're learning. It's all about matching it around your lifestyle. So if you're at work during the daytime and you can't really look at your phone, which quite a lot of clients don't, it's better to leave trades on for a few days. And basically what we call set and forget them. So they're on. Nothing you can do is going to change it. It's on. Just forget that they're on. If you can maybe look at it at lunchtime and then after work again, fantastic. With shorter term trades, you've just got to be at the computers a bit more, and be at the charts a bit more. Yeah, exactly. Make sure you've got the time and you're in a peaceful environment when you do it and scalp it. So I did expect more questions on it tonight, if I'm being honest, but I must have explained it all right. Bollinger Bands. So our next session next week is going to be on another part of the technical analysis. We are going to look at drum roll. We're going to look at flags, so looking at bull flags, bear flags, and we're going to be looking at pennants, bullish and bearish pennants. We're drawing them on the charts together, and again, helping them understand the part of our technical analysis. Bull and bear flags are ones that I personally use for my trading strategy as well. We did actually take a few trades off them before Christmas. Ryan's been waiting for flags, so we're going through them. One of my favoured ones. All of these strategies, technical analysis that I show you, I have tried, tested, exhausted, back tested a lot, and I have my own preference ones, but ones that I might not have a preference to, clients have found that they actually prefer it, that they actually prefer using it as part of their strategy because it's something they prefer. So that's why I like teaching an all-round game. Right, is there any questions? Has it been all right tonight? See a couple of new faces on. Mr. Johnson, hope you're well. Next week's one might be a bit of an extended session as well, so it might run 10, 15 minutes over. But it's all good because we're giving you knowledge. It's a bit more of a weightier topic module, bear flags, bull flags. Right. See you later, guys. Enjoy the rest of your evenings. I'll just have a look at the trade, see how they're going, because I've been on webinars for the last couple of hours, so I haven't seen them. Let's bag some pips. See you later, guys. Take care. Thanks for attending. Thank you. Thank you.